Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome, Zep.
How's it going, Brandon?
It's going good. It has been a wild ride this week as far as the crypto market. And we're going to be talking about the crypto market. We're going to be talking about some initial NFT offerings, some initial DEX offerings. So this next part is important. None of this is financial advice. Use it for entertainment or educational purposes only. All right. So the first thing I want to get into is the huge story in the entire crypto space this week. And that is Bitcoin hit its all-time high. It technically actually broke through, but from a technical analysis standpoint, it really just touched its all-time high. And then it dropped by $10,000. So it got rejected off that all-time high, dropped down to $59,000. The all-time high was at $69,000, and then rapidly recovered, got bought up. So it was just a crazy wild ride during that time. But the altcoins did the same thing. And HBAR in particular, I think when Bitcoin was hitting its all-time high, it was a bit over 12 cents. When that $10,000 candle happened, HBAR dropped as well. It dropped all the way down to 10 cents. It actually broke through a little bit, but just like Bitcoin hitting its all-time high, from a technical standpoint, that 10 cents essentially held, even though we had a little bit of a doji through it, and it bounced right back up, and we had fully recovered by the next day. So last week we talked a little bit about, where we are in the cycle. And I want to go over that again and then go a little bit deeper into it. So first of all, what is happening right now in past cycles? I think early on in the bull market, it's just crypto natives getting involved again, taking money that they had on the sidelines and getting back involved because they know we're kind of going back into a bull run. Well, last time we also had that helped out. This is back in 2020. We had that helped out by some enterprises or institutions getting involved, companies getting involved. So we had Tesla and we had PayPal and we had MicroStrategies getting involved as well. And that started a narrative. Well, we have a much more powerful force right now in the retail ETFs that were launched for Bitcoin. And just to talk about that capital flow, there's new buyers coming into those ETFs. That capital is going to Bitcoin holders. So we're talking about Bitcoin natives. And then they're looking at it. They might even be surprised that they sold because they had, an ask way above the market. So they have this cash now. They know we're going into a bull market. So they might look for another opportunity for Bitcoin to dip and buy back in. But it's also very likely that they're going to look at the altcoins and look at that landscape. And I think that's why we're doing fairly well in the altcoin space. The last time, again, going back to 2020, that Bitcoin broke its all-time high. In the 6 months leading up to that time, Bitcoin jumped by 100% from $10,000 up to $20,000, breaking its all-time high. During that time, to give you an example of an altcoin, we'll use HBAR as an example. HBAR actually dropped down. So this is December of 2020 when Bitcoin broke its previous all-time high. HBAR dropped down to below 3 cents, 2.8 cents. In the 3 months following that, HBAR really went on a run. It went up 15x compared to Bitcoin going up only 3x. So at this point in the cycle, even though I think we're being accelerated right now from those ETF dynamics I was talking about, it's not surprising to see altcoins underperform a little bit. But still, because of those flows, altcoins are doing fairly well. But let's get to the next point in the market. If we are entering a bull run, which isn't guaranteed, but it looks that way, it's the latter part of a bull market that really gets exciting. So it's not crypto natives that are getting the capital or putting the capital into the market. It's completely new entrants, people that, weren't in crypto before getting involved. And that's all around narratives. Bitcoin is going to take a big part of that narrative. L1s of all different kinds are going to try to carve out their own narrative. We're going to have gaming tokens and DeFi, and this time around, we're going to have AI. Those narratives are important, and this is why I think HBAR is fairly well positioned. It's well positioned because it still has a really strong narrative. It has a lot of unique attributes. We have all the technical abilities of HBAR. It's capacity for throughput, it's time to finality, it's Byzantine fault tolerance, all of those things. It's at or near best in class across the board. And I think when these networks are really tested, HBAR is going to prove that it is actually head and shoulders above these other networks, regardless of the claims that are made. But we also have the governing council. That's another narrative that is completely unique. We have Google and Dell and Mondelez, and you just go down the line of all of these amazing council members. Completely unique. Adds to our narrative. We also have the use cases they come out with. All the cool stuff that DLA Piper is doing and Dell is doing around edge computing, and Atma.io with their amazing throughput. And the retail stuff. I think we have a good narrative around that. Maybe not as good as some of the others right now, but I think we're going to catch up fairly fast with the likes of Karate Combat and Galaxy and our DeFi ecosystem, gaming, just go on down the line. These are all the reasons that I think that HBAR will still be able to capture mind share of the new entrants. It's just old crypto people getting involved and picking their favorite coins right now. But in that next phase, it's going to be about capturing that mind share. It's going to be about setting that narrative. And I think HBAR is fairly well positioned for that. And then we have our HTS ecosystem, which I think is doing fairly well. But before I talk any more on it, do you have any thoughts around what we saw with the crypto market, our HTS ecosystem, or anything else?
Yeah, I mean, it's been really exciting, I think, for me to see not only, this positive growth with the HBAR, which we got a bit of last bull run, but also this new token economy that's emerged on Hedera, right? In the last sort of 3 months or over the last year, teams like Dovu, teams like Hsuite, teams like Galaxy, I think Dovu and Hsuite have done over a 10x, in the past sort of year, which is just insane, right? There's opportunity throughout the ecosystem that there never was in the last bull run, because of this new infrastructure we have, because of these new DEXs, because of Sources Swap, because of HBAR Suite, because of the NFT marketplaces, because of the robustness of the token service, we have these token economies now that each represent their own sort of vertical. They can plug into these wider Web3 narratives. This bull run round, there's a lot more inroads for capturing the attention of the wider Web3 user base and the new market entrants. And that, I think, is particularly around, the native Web3 users, right? We've got the people that use Hashpack, the people that use Phantom on Solana, the people who are native to Web3. We can plug into these narratives with our token economies and draw them in. But beyond that, when the new market participants come in that don't know how to use a Web3 wallet, that probably won't be using a Web3 wallet to begin with, that are just watching YouTube, that are just buying off exchanges, that are just learning about crypto for the first time, what better narrative to come to them with than Hedera has been chosen as the Fortune 500 of Web3, trusted by the world's largest organizations to bring them into the world of Web3. For a lot of these market participants they're entering, they get more mature, right? The early adopters are the ones who saw the potentially, played around with DeFi and ICO summer, NFT summer and all these things. The longer these people come to take into the market, it shows that it's taken them longer to build up the trust. So if we can prove to them that there are trusted ledgers like Hedera that have got the trust of Fortune 500s that they've probably invested in the stock market already, then I don't think there's a better indicator for why they should, research and learn about Hedera and join the ecosystem in the long term. So I think, we're well positioned both on the Web3 native user front, but also on the new retail market participants that should be coming in over the next months.
Yeah, absolutely. Now, I do want to get into the Earthlings team because they had their HBAR weighted airdrop that went off without a hitch. And now they're talking about their INO, their initial NFT offering. So this is going to be starting on March 19th, and then it's going to go on to the 20th. Now, their gold NFT, the highest level of the NFTs, is going to give you some place to live. So an air cabin, a sea cabin, land cabin, or a barge. Their silver is going to give you one of their 5 characters, their initial 5 characters, Mr. Banks, Pepper, Flynn, Sky, and Kaya. And then copper is going to give you a way to get around. They have these really cool mono wheels that you're going to get with that NFT. Now, also with these NFTs, you're going to get their in-game currency, their Steam token. On the 19th, you're going to be able to buy all 3 of those NFTs. You're going to get about 94,000 Steam. Now, all of these are going to be at about 2 cents per token, but some of them are going to come with a little bit of a discount. So the bundle is going to give you a discount. I think it's at about 1.84 cents. The gold is going to be, I think, 1.92 cents, and the silver and copper is going to be even there at 2 cents. And if you're curious about the tokenomics and what all that equals, you can do the math. The total amount of Steam is going to be sitting at 1 billion. And of course, as I mentioned, they did that HBAR weighted airdrop, and there's some new tools coming out around that, both from Kabila on the private side, and then there's also a HIP around airdrops that's going to make it a lot more seamless. I want to get with Ed from Swirlds Lab to kind of explain what that HIP is, so we're going to get some more information on that in the future. The next token issuer I want to talk about, you already mentioned, and that's Hsuite. They're doing a fantastic job with their DEX, completely bootstrapped into existence. They have a lot of other tools. One of the other tools that I really like, considering as more money comes into our space, there's going to be more scams. And there are people that are getting taken advantage of right now. And one of their features is a multi-sig wallet, which gives you another layer of protection. So I suggest everybody go out and learn about that multi-sig wallet to add that additional layer of protection. And Zeb, it's funny, they were actually the first issuer of a meme coin on Hedera called HBAR. So that's still floating around out there. They put out some content around that looks really cool. But either way, they're coming out with some really serious tools as well. So check out Hsuite. I talk some more about that with Rob and Sharkbites, so we'll get to that in a little while. But meme coins have really been taking off, and it's been early in the cycle for meme coins. But did you see anything around that on social media?
Yeah, I mean, meme coins have been the sort of the talk of the industry for the last sort of week and a half, really. They've kind of led the charge with the altcoins that have been sort of outperforming. You had Bonk on Solana, you had Pepe on Ethereum, Doge, Sheeb, the usual suspects from the Ethereum lineup, all doing sort of 300%. And when you look at the size of these projects, that 300% represents multiple billions of dollars. So it's no small feat. And then we saw the same thing on Hedera. We saw Grelf, which is the most valuable meme coin on the network. They broke through $1, I think, all the way up to about $1.40, back down, and then they've sort of gone up again. But they didn't lose the dollar mark, to be clear there, which is a really extraordinary feat, both in terms, the psychological mark of $1, but also the fact that they bounced straight off it and kept on going. So I'd like to think that that energy will continue throughout our own ecosystem, through our meme coins and out throughout our token economy. And I saw that Mason Vesulius, he's one of our top influencers, he actually put out a tweet saying he's been looking at Ethereum. He thinks the Ethereum gas fees are too much for meme coins. He's been looking at Solana doing very well, and he would like to think that the Hedera meme coins will be next up. And so I'd like to think that he'll either be putting out videos soon or more content, whatever it might be, to drive more awareness and engagement to our meme coins, but also our entire sort of Hedera token economy from that. So that, in that sense, they're doing exactly what they should be, right? Meme coins grabbing the attention, introducing people to the wider ecosystem, which is very valuable in itself to be able to achieve that. So of course, very, very excited for that part of the ecosystem.
And I did talk to Warlock. He's the creator of Grelf. You put out part of that for the HBAR Foundation. There is the full interview that we're going to post a little bit later on. So it's a fun conversation. Meme coins are an important part of the crypto industry, no matter how you look at it. I want to stick with tokens for a while, though, because there's a lot of news going on. One of them is a token that's going to be coming over from another ecosystem. It's around the project called VR Jam. I caught up with Sam. He's the founder of VR Jam. He had some really interesting things to say. So let's listen to what he had. Sam, to start, can you tell us how you got into Web3 and give us an intro into VR Jam?
Sure, I'd love to, Brendan. And thanks so much for having me on today. Really great to be here. So VR Jam was a byproduct of over 20 years of my work, I guess at the intersection between the brand marketing business, the live events sector, and the entertainment world, particularly when it came to the music business. I spent a lot of time working with some pretty incredible high-profile artists and global brands to create all manner of events, from things like conferences through to brand activations, festivals, concerts, club events, you name it. I've been involved in producing or sort of executive producing literally hundreds of events across the globe over the last sort of 20 years. And really sort of moved really deeply through the entertainment business and built a pretty incredible network in that space in that time too. Got to work with some incredible folk. I was quite lucky. And part of what I was tasked or sort of entrusted to do with the brands and artists and creators that I was working with was really help them understand business strategies to monetize IP more effectively, to reach audiences while they did that. So this is about helping IP owners understand new ways to reach audiences and then to monetize those experiences with new business models and innovative new ideas and concepts. And in about 2016, I was running an entertainment agency in London. And we were working primarily with American artists, North American artists, and global brands from the UK and Western Europe to sort of create things like branded activations, concert events, festivals, you name it. We're sort of deeply involved in producing experiential marketing, I guess is what you would say, for these brands and creators. And we began sort of, trying to solve a problem that we found manifesting more and more around a difficulty connecting with audiences in digital space. So we'd have these incredible sort of interactions with audiences at live events and, fantastic outcomes for brands and creators in terms of connecting with audiences in real life. But there was a real lack of a way to do that using digital technology. So we set about creating a tool for a content creator, that could be a music artist or a conference speaker or a brand, to create and activate a really high quality, authentic live event. And that word live is really important. I'll come back to that. A live event that manifested in real life, let's say on a stage at a conference, and at the same time inside a beautiful, rich digital world that offered an array of possibilities for audience engagement, content creation, and most importantly, sort of social interaction and cohesion. Kind of like the next best thing to actually being at a live event. And we began tinkering with a really sort of early MVP product. It was really pretty awful, to be honest. Barely worked. But it
start someplace.
Improved the quality of what we were trying to do. It really sort of led us to understand that we had something pretty remarkable and amazing. And we showed it to some folks in the tech business and just had instant traction. From the first moment we sort of began revealing this thing to the public, we just had this sort of rush of interest in all corners. It was quite phenomenal. We sort of first announced the reveal of the product in early 2019. And within a couple of months, we've been added to what's called the Createch Ones to Watch list, which is a top 50 UK government citations list where they list the top 50 creative companies in the country every year. It's like this star-studded kind of, Grammy Awards of UK digital creative industries. And somehow we land up on this list. Wait, we're on this list? What? It's just this sort of astonishment, and
Sure.
It's kind of parallel with a lot of interest we were getting from folks in big tech. Google took a very strong interest in what we were doing from the early days. And it just kind of snowballed, to be honest with you, Brandon, And once we realized that we had something, truly powerful here, I was so compelled by the need to really propel this project forward. Because as I mentioned, at this moment, it was really just a side project for the entertainment agency that I was running in London. I was so compelled by this instant traction that I actually shut down all my entertainment industry ventures, closed the business I was running, went full-time into tech, and VR Jam was born. Right after we launched, we really began understanding that what we had here wasn't just a really novel and remarkable way to engage audiences and consumers in new ways, but we understood that there were some really potent, powerful tools and new opportunities here for revenue creation and value creation. And we wanted to be able to empower the clients and creators that we were working with to unlock these opportunities in new ways where they had a greater degree of control over that value creation system, that value creation chain, if you will. And we immediately went to Web3 to really, help understand how we could do this in a more powerful way. There's a really important colleague of ours who is, still a really close industry connection of mine to this very day, a chap by the name of Mark Rupal. Mark's a bit of a legend in the Web3 space, and he founded the Web3 Blockchain Game Alliance, which was the first sort of peak body for Web3 games in the world. And he was one of the founding team members and one of the key advisors, in fact, for Engine.io, who are sort of real pioneers in the NFT tech space. And Mark was one of our sort of early flag bearers, if you will, sort of one of our champions, cheerleaders, if you want to say that. And in about, I want to say late 2018, Mark sat me down and said, look, you really have to, I know you've got this vision to sort of build a token economy at the core of these stunning, remarkable experiences you're building for brands and creators, but you really need to understand NFTs and how NFTs can be used as a tool to commoditize and value IP, and how this can really power entirely new business models around the exploitation of IP sort of globally in terms of, integrating those opportunities with the core of sort of the crypto world. And I'd never heard of an NFT, and never had, nor had anybody else I knew at that moment. It was very early, and Mark really kind of clued me up and switched me on to how powerful this technology could be, and we just sort of picked it up and ran with it. So we've had the vision of a token economy empowering the client creators and clients that we work with to unlock value more effectively, and most important, to own that value chain right from the very beginning of the business. And we were very early with this stuff, Brandon. We started doing this long before most people had ever even heard the word metaverse. And yeah, Web3 has been a fundamental part of our product vision right from the beginning, and is really kind of connected back to, I guess, empowerment. We want to empower the clients and creators that we're working with to unlock value on their own terms, to understand how to create value for community members, be they sort of consumers or investors, using systems that they own rather than ones they don't.
Makes perfect sense to me. Now, from the scale I know that you're trying to tackle, and also the clear professionalism that you have, it seems like Hedera is a perfect fit for you. So what made you want to build on Hedera?
So we've migrated our token, as you'd see from some of the press that we've got, press coverage we've received in the last week or so. We've actually migrated our Web3 stack and smart contract infrastructure from Polygon to Hedera. And when we first launched our, sort of the Web3 side of our business model and our product, our tech stack, we surveyed the market and we sort of tried to find, sort of the best fit for us in terms of understanding, the right place for us to be insofar as, trying to find like-minded collaborators and community members. And most importantly, a technology stack that was really sort of fit for purpose in terms of the kinds of products and solutions that we were developing and building. But I got to be honest with you, when we started building on Polygon, we just didn't find that traction. We didn't really find that sort of core of collaborators and sort of truly motivated and inspired community members that we hoped we would. Quite frankly, I don't know, can't really put it down to anything. I can't sort of nail it down to one reason or another. But we just never really found we landed properly in the Polygon ecosystem. And then about 9 months ago, we began realizing that if we were going to really make a success of, sort of the core of our Web3 business model, we needed to move. We needed to find a better network that was more, native to the notion of providing solutions to clients and consumers. Obviously the Hedera Council is a great indicator of the way in which the whole ethos of Hedera is kind of attuned to the need to understand how products are built and made. Brandon, and that understanding of, I guess, quality when it comes to creating a product and building something that people are actually going to want and use, that's, just as fundamental to our vision as it is to Hedera's. But we found out really only through trial and error that was kind of a little bit absent, to be honest with you, when you looked at, I guess, some of the methodologies and strategies that Polygon have used to kind of develop their business model. And while a lot of great and interesting stuff has been built on Polygon by some incredible, developers and brands, there's less of a kind of a core strategy that underpins the why, that drives the network's existence, that drives the ethos behind the management team. There's a far, far greater degree of that galvanization, that spirit at Hedera. And we got to know the Hedera management team, in fact, through, by and large, through that guy I mentioned earlier, through Mark Rupal. Mark, if you listen, thanks, buddy. So Mark introduced us in some ways. We did have some tenuous connections already before he got involved. But when Mark sort of got to understand that we were in touch with Hedera team, he said, that's the right network for you, man. You need to go there. And he has a lot of connections at the top of the Hedera management infrastructure, management team. And he helped kind of accelerate some of the early conversations we're having and helped open those doors. And it's much to Mark's credit that we're here today.
Well, I'm pretty sure you're going to find the right tools, you're going to find the right collaborators and community to build your business. But the next thing I want to ask about is, I believe you're going to be leveraging the Hedera token service to launch a token. Can you tell us a little bit about that as well?
Exactly right. So, we are extremely concerned with ensuring that we land effectively in the world of Hedera, if you want to say that. We want to ensure that we are adopting every last ounce of Hedera native technology we possibly can. And so in that spirit, HTS was absolutely essential for us. We want to be fully functioning with as many Hedera dApps, apps, wallets, tokens, exchanges as we possibly can. And so, of course, in order to achieve that goal, HTS is essential. There's also a lot of great features of the Hedera network technology in terms of speed, finality, cost that are just extremely appealing. And we also, we really want to build our product, found our project on the kind of bedrock that exists in terms of the quality of the Hedera ethos, the quality of the management team, the quality of the community that it really exists throughout the ecosystem. I guess when I going back to what I said earlier about, I guess, sort of the experience we had at Polygon and the decision to move, there is kind of an idea of quality versus quantity here, Brandon. You might looking at Polygon as more of a quality business model, and Hedera as more, a quantity business model, and Hedera more on the quality end of the spectrum. And that's very much where we live. We've really built our business over the last 5 years with an organic approach to doing things right. Craftsmanship means a lot to us, Brandon. We've really validated the quality of our product and also the product market fit we've produced by delivering solutions to clients really, really carefully and organically. We bootstrapped the first 4 years of the business, didn't take a single penny of VC money for 4 years because we wanted to know that we had a product that we could scale, one that was validated in terms of our ability to deliver it into the hands of paying customers. And we've had some incredible clients over the last four years, Brandon. Here I'm talking about brands like Twitch. They're our biggest client, which are an Amazon-owned company. Red Bull, definitely the biggest consumer brand we ever worked with. Did some amazing, really, really cool stuff with Red Bull. The UK government, one of our early clients. On the creator side, you're talking about some of the world's biggest events. Glastonbury Festival, the biggest festival in the world by market share and the oldest major festival on earth. Kind of like second only to Woodstock in terms of pedigree. We created, in collaboration with them, back nearly 2.5 years ago now, the largest VR-led music experience of all time. 4.3 million, count them, 4.3 million audience members over 2 days. We were able to engage with that project with Glastonbury Festival. So there's been a real sense of, I guess, validation, care, concern, and craftsmanship around how we built the business, how we defined the product, and how we've responded to demands from the market, which includes our clients, of course, to make product development decisions in terms of planning the product development roadmap and really understanding that it's the needs of clients and consumers that really should define how we build and what we build. And that is fundamental to Hedera too, as you can see with the membership of the governing council. These are all consumer brands, right? So there's this idea of sort of craftsmanship around consumer product and consumer messaging that's common in terms of the underlying sort of vision here, and that just makes Hedera the perfect place for us.
Sam, you're telling us exactly what we want to hear. Finally, how can
the
truth? So the last thing I want to ask you about is just how can the Hedera community get involved?
We're going to be revealing an array of incredible opportunities for the Hedera community to get involved. So part of the Web3 development that we've done over the last 2 years is really to create an array of solutions for community members to participate in the development of our virtual world and our technology. Now, this is a very different ethos, and this goes back again to the notion of craftsmanship. This is a very different ethos to the kind of ethos that you might find on some of the metaverse platforms. And I must admit, we do try to steer clear of using that word because we were here long before Mark Zuckerberg ever rebranded his company. We were doing that years before Meta adopted the word metaverse. And we're not a big fan of most of what Meta does, even though they're a former client of ours.
And so let's not forget that they kind of took the Hedera Governing Council idea when they were coming out with Libra as well. So they're not.
Yeah. Look how that went. Yeah. Look how Libra went. Wow. Yeah, we're not a big fan of walled gardens here. In fact, we try to break down walls, not build them. There is this sort of idea that we've built a number of different solutions for community members to really get involved in collaborating with our core team to develop new tech, to build new spaces inside the virtual world that we're creating, and then to monetize those solutions with a number of novel Web3 native tech products. There's some really interesting stuff on our YouTube channel about how some of this stuff works. And what I might do is just share a link with you, Brandon. If you could just post this alongside this video, that'd be fantastic. It's quite a lengthy demo. I'm going to say it's literally like a over 10-minute long kind of demo. So I don't think everyone's going to be keen to watch the whole thing, but it's a really good description of how the solutions that we've built are going to empower community members to do things like collaborate with our team to build really rich, beautiful virtual spaces, to bring other users to the platform and earn rewards for doing so, to power the development of virtual real estate, and then commoditize and monetize those spaces with native staking pools that are run and managed by community members, through developing bespoke avatars that can then be rendered as AI characters and then traded on our marketplace. It's just some really fun, cool, and hopefully profitable opportunities for Hedera community members to really kind of embrace what we're doing. And what we're hoping to build is a small sort of core group of true believers who are inspired by the tech we've built, by what we've got coming to market, and really want to kind of participate in the kind of user experience of the Web3 solutions that we're developing.
Well, Sam, this has been a really interesting conversation. Thanks for coming on and telling us about VR Jam, and we can't wait to have you back as you progress down your roadmap.
It's my pleasure, Brandon. Thanks so much for having me today. I'm really looking forward to connecting with you once again in the future. Thanks.
So Zeb, we were talking about their token there. They actually have their IDO going on right now. It's being facilitated by Headstarter, so check out their social media to get some more information on that. Another token issuer, they're doing something completely new in this space, and you might have seen that I joined their council called The Mouth. I put together a little video explaining exactly what they're doing. We're going to break it into two parts just because it is a lot of information crammed into just a few minutes, but let's check out part one. Hi everyone. Today we're doing a deep dive into The Mouth, a decentralized media project that is launching on Hedera soon. The Mouth calls themselves the audience-owned media group. Now let's see what that means, starting at the proposed business model. Okay, so this is the traditional media model, the one we've been using since the newspaper was invented. A media company, a radio station, a newspaper, or a TV station produces entertainment or news content that is then broadcasted, and the audience consumes that content. And then there are the advertisers, the ones that finance the media companies, paying them to reach the audiences with commercial messages. With the arrival of social media, things changed a little bit. The role of content creators and distributors was separated. Content creators became a more democratic and granular group, and they started using social media platforms to reach their audience. Advertisers pay those platforms to show their commercial messages, and the content creators get paid by those platforms. But one thing stayed the same. The advertisers are the interrupters to the audience, getting in the middle of their content consumption, trying to turn them into customers. There's a saying about TV advertising that goes like this: if you're not paying for the product, you are the product. That's what the audience is in these models, the product. So this is basically what The Mouth is proposing, turning who is today the product into the owner. This ownership is controlled by an HTS token called Mouth. Holders of the token will have access to revenue share through a non-custodial in-wallet staking mechanism. Audience will also steer the future of the platform through a DAO mechanism. More on this later. Now let's take a look at their proposed model. Here the advertiser sends the message they want pushed along with a bid in HBAR to The Mouth, which acts as a channel aggregator. The Mouth, through a series of intricate social and financial mechanisms that we'll see in more detail later, distributes both the message and the payment throughout a network of affiliate creators, affiliate channels, and the project's own channels, also through members of their community, the audience. The message is then displayed to a very qualified audience, composed of Mouth holders and, of course, non-holders as well. The audience receives messages in a way that's completely different than other models. Not only are they being directly paid to see that message, something that's already done by interesting initiatives like Brave's Bat token, but the advertiser is also sponsoring the project they're involved with. And we all know how Web3 communities have a passionate relation with the projects they're into. Right, H-Barbarians? So advertisers will not only have the audience's full attention and very high engagement, but they will also be reaching a target audience that will already have a strong reason to like them. None of those things are easy to find in a paid channel, and all that is done in a fair, verifiable, and trustless way through the Hedera Public Network and the Hedera Token Service. And Zep, it's funny because we talked about the HBAR weighted airdrops and they already used it. The Mouth already used it for their governance token. And that's going to allow you to get involved with their platform. We're going to talk a little bit more about their token in part two. But in the meantime, I want to get into a team that you were really excited about that just came within the Hedera ecosystem. And that's NeoTokyo. They're working with Dropper. I caught up with somebody that we've talked a fair amount with in the past, Eric. He is the founder of Dropper. And he had some really interesting insights on exactly what's going on with NeoTokyo. So let's check that one out as well. Eric, can you give us a quick recap of what Dropper is and the announcement that was just made with NeoTokyo?
Yeah, absolutely. So, as mentioned before, Dropper is essentially Web3 gaming infrastructure. So, what does that mean? It's essentially a suite and a tool set of APIs that developers can use to essentially build out anything from white labeled stores to marketplaces to custodial wallet sign-up flows, etc. The idea is that game developers should focus on building their game loop and not have to become blockchain developers in order to integrate into Web3. As for the NeoTokyo announcement, NeoTokyo is essentially the biggest gaming NFT community on Ethereum, or at least one of the top ones. They have a really unique couple of founders. Alex Becker is obviously one of the biggest, sort of influencers, I'd say, in the Web3 gaming space. So I think what's really exciting about this announcement is that it's bringing. The idea is what we're trying to do at Dropper is bring liquidity from other markets into the Hedera market. I think one of the biggest challenges Hedera faces, it's a rather small community. There's a lot of other layer ones that are approaching rapidly that essentially are competitors to us. And if we want to win kind of being a top 5, top 10 L1, then we're going to need, a large secondary liquidity market. And I think right now that's one of the biggest challenges we have. So our goal with this NeoTokyo partnership is the first of many, which is bringing communities that are not essentially, participating on Hedera, that don't even really know, people don't even know that what even Hedera is, into this community and giving them opportunities to essentially get into projects that they find exciting within Dropper's infrastructure and that broader Hedera community.
Eric, I think you're hitting the nail on the head. We've seen with Karate Combat, they actually have two tokens. They have one that's on Ethereum and then one that's on Hedera. They tap into the liquidity over there on Ethereum, but in the last time they had their up-only gaming, 99.5% of the up-only gaming that was played was done on the Hedera token. So that is all the utility side. And, again, like you said, bringing that liquidity over. So at first that didn't make a lot of sense to me, but actually when I saw it work in practice, it makes perfect sense. So that's kind of what we're seeing here as well. So why should the Hedera community be excited about this announcement?
Yeah, absolutely. So I think for a couple of reasons. One is I think it's demonstrating that there's other partners coming into the ecosystem from other chains. I think we need more secondary liquidity. In order to do that, we're going to need to invite market participants over here in an exciting way. So I'd say that's the first piece. The second piece is I think it starts to interconnect different communities. So if the Hedera community is a big community, then at the NeoTokyo community is also a huge community, right? So as we bring on more and more of these NFT partners, it essentially, the idea is it's building a larger community, but also interconnecting us across sort of this Web3 universe. And I think one of the biggest challenges that Hedera has faced for quite a while is we're kind of on our own island here. Bridging to Hedera is not as simple as other chains. It's a bit of a challenge, I'd say. Also, just like I feel like not as many people know about Hedera when I speak about it when I'm talking with Solana NFT communities or Ethereum NFT communities. They just aren't familiar with what we are and what we're doing. So I think the approach that the Karate Combat guys are taking, which is issuing a digital asset or issuing their token on Ethereum and then bridging people over. I think that's a great way. I think what we're doing is another great way of just basically saying, hey, like we need to interconnect into different NFT communities, and we need to bring those people into our community. And I think there's no one better than NeoTokyo just because they are such a big community. They have so many rock star founders within that NFT community, and I think those are things that you really can't get enough of. So the idea is, how do we connect ourselves into the broader ecosystem? How do we bring more market participants in? And essentially, this partnership is just the beginning of us starting to do that.
Very well covered. So what should we be looking out for in the weeks and months to come when it comes to this partnership?
Yeah, absolutely. So I think the biggest thing is it's going to give us a new funnel of gaming projects coming to Hedera. I think what this essentially gives us is a new way to onboard Web3 games, and a lot of founders who just, again, either I didn't know or they didn't know about Hedera, et cetera. It gives us a new opportunity to kind of bridge those people into building on Hedera, and I think that's the biggest thing people can expect is like a larger influx of builders rather than THF or somebody going out and trying to find projects and kind of getting into this like competitive process with them and other chains. This just creates a new funnel for early stage founders who go to Neo Tokyo. They understand that that's an authority in Web3 gaming. They're looking to kind of try to figure out what avenue they can explore, and us being kind of like a tier one partner there gives us the ability to then access those founders at sort of the ground level. And I think that's one of the most challenging things that any chain has if they're trying to compete with the Polygons, the Immutable X's, Ethereum, et cetera, is how do we get access to those early stage founders?
Absolutely. Makes perfect sense to me. We're really excited about this partnership. Thank you for making the connection, and good luck.
Thanks, Brandon.
So great to hear from Eric there. In the last couple of weeks, we've covered the significance of Neo Tokyo as the largest cohort of gaming founders and investors in Web3. So, that ticks multiple boxes, right? Developers, teams, founders, and funding for these token economies. So a really, really critical piece of infrastructure for us to be tapped in there to both raise awareness for our ecosystem, but also bring in builders and hopefully capital through that. So I'm excited to see where, Dropper takes us there. I know Eric said he's already had multiple people applying to Dropper for this fund. So hopefully we'll see the developments of that over the next sort of few months or so whilst we're in this bull market.
Yeah, it should be exciting to watch. We'll make sure to follow it really closely. I think there's a lot of potential there. One thing that we didn't do last week, but we caught up with it this week, is Shark Bites. Rob had some great questions from the community this week. He had some really interesting insights, and we went extra long. It's over a half an hour long, but the entire thing is gold. So let's check that one out. Rob, welcome back. How was your week off?
Hey, Brandon. Yeah, it was great. I went skiing in France with my daughter. It's a long way for a long weekend, but it was just awesome. Great snow, so thanks for asking.
Well, with your 18-hour days that you pull for the Hedera community, it's certainly well-deserved. We're going to jump right into these. HC says, I've seen comments from the community about the lack of attendance from members at council meetings. I wonder how much Rob, other members, and or Charles manage the possibility of the governing council becoming overly bloated, slow, with too many ineffective meetings, committees, and internal initiatives. I'd love to hear this from somebody who has the inside track on this. Rob, what are your insights?
So the governing council is Hedera's superpower, right? I mean, it's the thing that none of the other layer one networks have. But it comes at a cost, right? It comes at a cost of, maneuvering and managing 31 now, big organizations. It will be 39 in a way which allows for true governance to be applied. Its purpose is to govern the network, to oversee this first phase of decentralization and do all the things it's set up to do. Now, that's quite difficult when you've got all of these big organizations geographically and sectorially diverse and by design. So yes, it does become quite a challenge. And so, when because we're very transparent about the minutes that we publish from the governing council meetings, everyone can see who attends, and it causes some consternation in parts of the community because, there are some council members who attend, far fewer meetings than others. And there's a range of reasons for that. You get turnover of staff, so the advocacy, the champions internally sometimes change, and it's quite hard to re-engage. You have very strong advocacy, strong supporters across most of the governing council members, but then you've got different time zones. You've got individuals who are, for whatever reason, on vacation or not available. So you're not going to get 100% attendance all of the time. But there are some very good council members who are there all the time. And it's not just the council, right? We've got committees. So we've got 6 committees. Committees sit every month. We have the board, and the board is largely made up of the council representatives as well. The board has its own committees, and risk committee and finance committee. So there's a lot, governance comes at a cost, and it comes at a cost. And remember, many of these representatives are either volunteers or the leadership teams are remunerated, but they're still doing a day job as well as with their, or most of them are doing a day job with their primary business. So we do need to strike a balance. Everyone is engaged in a way that is there to do the right thing for the Hedera network. But too many meetings and too long meetings are counterproductive. And I had this very conversation with Charles the other day. We do need to strike a balance. I'm co-chairing CorpCom, so we're trying to find the right cadence to get the right group of attendance on a monthly cadence. But at the same time, we're also running showcases and use case workshops for council members as well. So, it just all adds up. So striking the balance is really important. Some of the council members, attend far less than others. And there's all sorts of reasons for that. I mean, it's not just the excuses that I've just given around, vacation and, time zones and everything. Some actually aren't as engaged as others. And we are actively seeking to re-engage. As everyone now knows, the first 13 have been renewed by a council vote in December. So for a 3-year term. So that's secured them. What we now need to do is to ensure that everyone is engaged, everyone is building, everyone is actively working on the Hedera network. And I think the community would be surprised how many actually are, to a greater or lesser degree, participating and contributing. They don't always have to build production, high throughput use cases to be classed as being fully engaged. They contribute in many other ways, and all of that is beneficial. And those that don't attend the meetings, they will be now actively engaged and to find out ways that we can change that. And sometimes it's a cultural thing, sometimes it's a personal thing, where the advocacy and the individuals internally who have been Hedera champions have moved on. So we're putting in place these things to ensure that all the council members fulfill their obligations to the Hedera network.
Well, we get these questions on the governing council on a regular basis. We also get questions for staking, and you usually take them on a fairly regular cadence, just like your meetings. This next one I like because it's a little bit out of the box, and it comes from Coinman, the Coinman, who says, what are Rob's thoughts on the tax implications of gaming that utilizes NFTs and fungible tokens? Owning your in-game assets and being able to trade them on external exchanges sounds exciting, but in some countries, each trade would constitute a disposal of an asset and considered a chargeable gain or loss by tax authorities. Web3 gaming doesn't sound as fun if you have to fill out a tax return for all the magic swords and invisibility capes you trade with other gamers. Again, this is an interesting question. Rob, it's something I actually think about a fair amount, but what are your thoughts?
So I'm not a tax advisor. Neither am I an active gamer at the moment, although with Earthlings coming along and all the amazing things that Lithos is doing, I'm kind of seeking to carve out some time. And Coinman always comes up with some amazing questions. And I would normally, put this to the side because I don't give financial advice and I'm not a tax advisor and I don't know. But I did want to handle this or tackle it head on because it is a concern generally across the Web3 space that there's a lack of clarity on this. And he rightly says it depends which country you're in. It's the jurisdictional application of regulation. Here in Australia, it's still unclear. We're still having this conversation. I'm on the board of Blockchain Australia. We've got an active, ongoing political engagement process whereby we have to educate the politicians. And every time they change, then you're kind of starting from square one again. But that's just part of the space until we get this regulatory clarity, until we get this framework in place whereby we can work it out. I was actually heartened the other day when I was looking at, just as a bit of a sidebar, SourceSwap have announced that in their new SourceSwap Pro, a set of accounting tools or the ability to download all your trades in a way that is applicable to crypto tax platforms. So maybe they'll consider including some kind of trading around NFTs as well, but it's quite hard. I mean, Centex would have to be part of it. All the other infrastructure providers and platforms would have to be part of it, but maybe there's a standard there. Maybe there's some way of contributing that that feedback on trading. But it does get a bit scary because all those magic swords and invisibility cloaks do cost a lot of money, and if one trades them, then there's a capital gain. Now, most countries, certainly in the countries I've lived in, secondary markets, are just the same as boot sales. They're just the same as garage sales. You're kind of buying something and then you're selling it on. It's like Craigslist, or Gumtree, as we have here in Australia. So there's lots of ways of doing it, and the analogy is just that, right? I've won a magic sword, or I've earned a magic sword in one game, and because it's Web3, I can go to a secondary market and sell it, and presumably sell it for some kind of uplift. Is that a taxable event? Well, it depends where you live, but if I get into gaming, I might be considering moving countries so that I can get the tax benefits of that. Maybe Switzerland. Maybe
well, like you said,
maybe the crypto valley will become the crypto gaming valley, and all my magic swords will be for free.
Well, like you said, we aren't tax professionals. I don't mess around with taxes. I mark everything to market when I get it. And then if I hold it, I'll wait until I sell it. And then I use that as my original cost basis. I just went through all of that with my tax guy. He thinks I'm his special case, but he's certainly learning a lot from everything that I'm messing around with. But I don't mess around with taxes. I just mark everything to market and go with that. That's certainly not tax advice, but I think it's the safest way to go.
It's smart.
Yeah. The next one we have is from Weeboni, who says, just learned about Neuron being approved in the UK, and then Amazon wants to go live with their drones. That's their wing program. They can't do this without Neuron, can they? Hint, hint, ask Rob.
I've been very vocal in that Neuron is one of my favorite Hedera projects, and always has been. The IoT origin or genesis of Neuron has kind of expanded into a fully blown network layer with decentralized public infrastructure play, SDKs on devices. I mean, it's a supercharged Helium, where Hedera is the next generation blockchain. Neuron, I think, is the next generation IoT platform and network, all built on Hedera, of course. So, I mean, some of us think of it as it's, the IoT or the drone-based use cases, which it absolutely still supports. But I think the network play that they've now got in place, and there's some super smart guys on that team, is going to really blow away the whole of the deep-in space. So the question was about the UK approval. That was the recent announcement about Milton Keynes City Council adopting a project which includes Neuron to track your medical drone deliveries and other kind of forms of flight safety, which was the initial use case. So, I mean, it's great to see a public authority adopting this technology in this project. I think it's a 12-month project, and details are scarce at the moment, but we'll find out more as we go. Knowing James and the team as I do, I think, I know that's just the first step. And whether Amazon and its drone deliveries, kind of establish themselves in the UK or not, there is certainly a big market there, which Neuron is very, very well placed for. And beyond the UK, globally, because, of course, this is a global network. So very, very excited to see how Neuron develops, and hoping to use it at some point as well, because I've got lots of IoT use cases and contacts that are seeking to use such a network as that.
Yeah, and I think I misspoke there. I think it's Google Wing. Amazon has a separate drone program, but I think the whole point is their core business. They just want to deliver packages with drones. Yep. They don't want to run one of these systems. So I think Neuron is well positioned, but we'll have to see how all that plays out.
And the Milton Keynes project has specifically got scope around medical drone deliveries. So, it's exactly the same. It would demonstrably work and then be applied across more commercial or retail use cases as well. So like I said, it's very, very smart.
Sure. All right, so Fred5 asked that we cover the comparison of Solana with Hedera as far as TPS capabilities. He says Solana claims 710,000 TPS to Hedera's 10,000. Also, please go into depth about why Hedera daily transactions are exactly 8 million by many of the council members. First, how does one do 8 million transactions in a day? And second, why is the exact same number reported for each council member processing the transactions? All right, so we'll take the first one on the comparison between the throughput capabilities between Solana and Hedera first. What are your thoughts?
It's comparing apples with pears, to be honest. Solana's, and we don't speak ill of any of the other layer one networks, but and I don't know because I've spent no time in Solana. There's no reason for me to. But what I've read and what I've been told is that there's a lot of faulty data within that those TPS numbers. Those are maximum numbers as well, of course. It's not necessarily anything to do with utility or usage. A lot of it is, cycled bots and other sort of back-end services, consensus-based services. It is what it is. You've got to look to the utility of the network and not its published capability, and then actually see what use cases are driving the TPS. On Hedera, we know that vast majority of the Hedera consensus service transactions are Atma.io. It demonstrates the scale and the throughput potential of Hedera. And as more and more of those use cases come online, we know how that network is going to scale. So I would be a lot more confident in Hedera's ability to meet the published numbers rather than some fairy tale that another layer one kind of publishes.
Yeah, claims and actually doing something are two very different things. And we've
very,
seen
very different.
Hedera go through 10,000 transactions per second. I want to see when Hedera has a few shards going and we're doing 30, 50, 70,000 transactions per second. And if Solana is keeping up with that at the time. Like right now, we have proved that we can scale to several thousand transactions per second. That hasn't been done in practice by any other networks. The other thing, I think you dovetailed really well into his next question of why 8 million transactions being processed by every single one of the council members. And it's a pretty simple explanation. Atma.io, which is doing the vast majority of our transactions, they send a set amount. They split their transactions evenly and send them to all of the different council members, and then they're processed and they reach consensus. So that's why you're seeing the same number on each of those nodes, is because it's Atma.io, the largest producer of transactions on the network, splitting them up among all of the different nodes. So I'm sure you have some more insight on that, but I just want to throw it out there because I knew the answer.
Yeah, exactly. And that's how you architect or how you solve for high throughput use cases, because we've got fair ordering on the Hedera network, and every transaction is before and after every other transaction. You have the ability to rotate around the nodes, but the ability to, and that enhances your resilience. It enhances your ability to know that if one node goes down, then you're going to continue to operate at that high throughput. And it's just the best way to do it. If you've got a single fire hydrant, directed at one node, then that's a lot more risky than spreading across all of those nodes. And this is what they've done, right? They've just kind of segmented up and then rotate around the network. So that's why it's 8 million, right? It could be any other number. Presumably, there's a variable configured in their code somewhere, and it's or their control panel, and they'll determine over time what the most appropriate chunk is. But that's how they'll do it.
All right. Makes perfect sense. Now, Eduardo has a few questions. I'll actually take this first one. He says, is Karateka moving to Arbitrum? I have heard that Karateka, it is a game that was building on Hedera, is moving to Arbitrum. Now, let's make it clear that even though they're using the free IP of Karate Combat, it has nothing to do with Karate Combat itself. Karate Combat is one of our marquee use cases and is not going anywhere. They're going to stay built on Hedera. There could be all kinds of reasons why they would switch networks. There's a lot of money sloshing around. They all have these foundations. Maybe Arbitrum just outbid what the HBAR Foundation was doing with less restrictions or something along those lines. I'm not saying that's the case. I'm sure that they claim that there's other reasons, but that could be one of the reasons why they left. We have all kinds of applications moving from other networks and coming to Hedera as well. We talked about one a little bit earlier in the show with VR Jam that went from Polygon onto Hedera, and that's happened countless times with other applications as well. So just because we lose one out of every 10 that's coming to our network, I wouldn't get too concerned about that. Do you have any thoughts on that before we move on to the next one, Rob?
It's always unfortunate, but it's not the main show. It's not Karate Combat. And like you said, it's free IPs, so they're free to do whatever they like. This comes up on X quite a lot as well. I think there was some tweet I saw earlier today kind of calling for an answer on why the migration from Hedera to Arbitrum. It's simply not the case, right? Projects will come and go, and that's very healthy for the Web3 space. It's actually good that a project goes to a different network because they can always come back, and getting exposure to the frailties of other networks is a good thing.
There you go.
So yeah, I'm not concerned about that at all, other than the messaging, right? So we've got to make sure that Karate Combat, and everyone knows that Karate Combat is on Hedera for good, and are doing amazingly well. It's become one of the cornerstones. I mean, the fact that they're going to be running Karate Combat in consensus will take it up another level. I mean, I'm sure you'll be there and broadcasting live from ringside. But it's just another amazing success story of the Hedera network.
Yeah, they're doing amazingly well. That's going to be the hottest ticket in town down there. All right, So the next one is definitely in your wheelhouse. He says, this year, 3 new governing council members were announced. Can we expect a full council by the end of the year? Now, in December, Shane claimed that we might have a full council by the end of 2024. And at the time, it seemed a bit far-fetched considering the pace we had up until that point. But now it doesn't seem all that out of the realm of possibility. What are your thoughts?
Yeah, we wait for months and months and months, and then we get 3 in the space of 3 weeks, I think, or a month or so. And what a great combination, So getting Hitachi, getting Mondelez, and getting BitGo, there couldn't be more different businesses, and yet every single one of them has a unique and contributory and additive effect on the governing council. And because they are, these latter stage council members, they've been through the hoops, right? Memcom really goes to town on why they're joining and the use cases that they're bringing and all the other benefits. I have to say, and I wasn't around last week when it was announced, but the BitGo process took, a significant amount of time because there wasn't an obvious rationale behind having BitGo's kind of custodian or custodial provider joining the governing council other than the immediate effects that it would have, except that over time and through discussion, they made a very, very strong case for the sorts of aspects that they would bring and the benefits to all the council members potentially, but also, externally to the exchanges within which their technology integrated, the fact that they already hold a lot of HBAR, the fact that they're running 6 mirror nodes. I don't think they're public yet, but they're significantly invested already, which was a surprise, actually a surprise to all of us. And I've been really heartened by the response of the community. I mean, almost the community feedback on BitGo was, this is one of the best governing council members that's ever been announced. And that wasn't my personal view when I first sort of saw the application, but it makes sense. And that's kind of, the wisdom of the community is far greater than the wisdom of the governing council, I think, in many ways. And I can say that with a foot in both camps. But yeah, so I think those 3 governing council members, 3 in quick succession, has been an amazing addition. I'm speaking to them all with my CorpCom hat on. They're all, eager to engage and talk about their use cases and, take them forward. So I couldn't be happier. Is it 31 or 32?
32, I think. I think we're at 32.
Yeah, with BitGo, it's 32. Yeah.
So 7.
Yeah. So it's 7 to go. And I mean, Shane doesn't know, right? Shane, the foundation have a role to play in presenting potential governing council candidates into the process. and then they stand back and watch the process go. There are other introducers of council members as well, and as I've said in the past, there's quite a strong pipeline. In fact, there's a very strong pipeline. I wouldn't bet against it this year. So 7 this year. I think it might be a little longer, but not that much longer. And what's really interesting is that then changes the dynamic completely. So when there are no seats to fill, when there's a kind of a handful every year sort of rolling off or potentially rolling off, who will be fighting to keep their position or demonstrating their right to stay for a second term, with a growing line at the door of new candidates coming in, that changes the dynamic completely. We will have some fall off. I'm sure some will decide that one term is enough, but I actually think that most will want to stay, and then they will have to. Everyone will have to step up the game. Even the 1 and 2 use cases will be looking for 3 and 4 use cases. The 1 and 2 use cases were looking to increase their metrics. I'm super excited about that. So that can't come soon enough for me. And as the rep for AP Plus, I understand that we don't have a live use case yet either. So that's one of my focus areas for this year, because I don't want to be kicked off the council because we don't have a live use case. So if I feel like that, then I know that most of the council members will feel like that too.
All right, we have one more from Eduardo. Are smart nodes of Hsuite a game changer?
I think they are. I've always been a massive fan of the AppNet architecture. So that's the use of the Hedera consensus service with a layer on top, which each of the nodes that is connected via HCS is then kept in sync in that way. In that way, you can keep business logic and private data, secure and private. They've taken this another level by creating this smart contract-free layer that utilizes consensus service and token service. And I'm not fully across the details. Apparently, there was a great interview just yesterday or in the last few days, which goes into a lot more detail, and it's on my playlist for today. So I'll come back with more details when I understand them. But that team is kicking goals. They're growing a very, very strong community of support around them, demonstrating the effectiveness of that architecture. There are constraints around using smart contracts, and the whole rationale behind Hedera's API-driven layer with consensus service and token service was that it was smart contracts. There was a better way to do things than smart contracts. The smart contract EVM is best in class. We've got this EVM equivalence now, which attracts developers from other chains that are familiar with Solidity. But it's still slower. It's still, less, in some ways, less secure. It provides more attack vectors than the base layer services. So, for all of that, all those reasons, the Hsuite team have been, true to their values, because they've always stated these things, and in many ways true to Lehman's original vision of how the network should operate. So, I applaud them for that too. I haven't built on Hsuite, but I intend to at some time very soon, just to find out for myself how good it is. But yeah, all the signs are there that it's a great addition, and it's a unique addition that actually then exploits the core beneficial properties of the Hedera network, and has a rightful place in our ecosystem. So yeah, I'm looking forward to seeing how they take it forward.
And hats off, to this point, they haven't taken any outside support. They've built everything on their own. They've done a great job. They have millions of dollars worth of TVL all on their own. So hopefully at some point they do get some support and they can take it to the next level.
I spoke to the founders when I was at the foundation, and I honestly didn't understand what
they were doing,
proposing.
Yeah. But they knew,
and they've been very closed about their architecture, and very kind of and working it out. They wanted to make sure it was right until they kind of exposed it, and I think that's what's happening now. So yeah, I'm very excited to find out. But yeah, to be able to stay the course, stay true to your values, to self-fund, and to build a community. I mean, that's takes a lot of that's true entrepreneurial spirit. And I couldn't be happier that they're now achieving the success that they deserve.
No question about that. All right, so the last one we have is from Blue Lantern 5241, who says, I'm looking for an outside of work project. I'm deciding on HBAR or Solana. I'm afraid of Solidity due to the Ethereum gas fees. Is this a logical worry?
There's only one answer, of course, and you would expect me to say anything else.
I think he's getting confused because we are on EVM. He's assuming that we're going to have similar gas fees.
Yeah. So we have gas fees. I mean, that's what HBAR is for. It's a utility token that pays for network fees, we call them, right? So those transactional fees you pay whether you're using the HCS or HTS APIs or you're coding in Solidity and running it on our EVM standing for Ethereum Virtual Machine. Ours is the Hyperledger Besu standard EVM, which is supported through the Hyperledger Foundation project and has been souped up. It's been turbocharged and optimized for Hedera. So you can get the best of both worlds. You get, if you're a programmer, you can use the standard programming languages that everyone's familiar with and the SDKs to use the APIs. And get into building Hedera applications straight away. If you want to learn Solidity, or if you come with some Solidity expertise, then you can also build dApps on EVM, on our smart contract service. All of that is those are transferable skills. Those are now easy to learn. We've got a range of no-code and low-code platforms in JoeGet and others that allow us to, or allow new developers to start, utilizing the code or extending existing platforms with widgets and low-code solutions. So there's lots of ways to actually get into this. There's lots of really good tutorials available, and huge quantities of example code on GitHub and other repositories to get started. Remember, Hedera is all open source as well. So the full stack from the consensus layer all the way up, things like Stablecoin Studio, all of the Guardian ecosystem, all open source. So that, there's digital identity stacks. You can kind of assemble whatever you want. So it's not difficult to get started if you're a programmer. And there's a range of tutorials and also some campaigns to reward through hackathons and learn to earn kind of campaigns as well. So the answer to the question is Hedera is the only way to go. Any other platform, I mean, if you've got experience on other EVM-based platforms, then you should be able to transfer quite easily. If you've got experience in Java and JavaScript and the other programming languages, then it's even easier to get started. The non-EVM platforms like Solana, I think you have to learn new programming languages, and then you've got networks that go down quite regularly, and et cetera, et cetera. So, you've come to the right community. Discord as well, of course, is a very supportive environment for the techies, and go and ask questions. The developer advocates are very, very supportive and usually camped out in there. So lots of reasons to stay and build some amazing things.
And you won't have to worry about those Ethereum fees. There are fees, but they're orders of magnitude less. You can go and check out what all of those are on the Hedera website, and you should be all set. All right, Rob.
And predictable.
That's right.
The key thing.
That's right. Priced in dollars. All right. So, Rob, we really appreciate your time this week. Your insights are always invaluable to us. We also want to thank all the people that ask questions. If you have some more, go ahead and drop them down there in the comments. That's all we have. Rob, we'll see you next week.
Thanks, Brandon. Take care.
Couldn't be more excited to hear from Rob as the AP Plus representative from within the council. I know he's got a lot of stuff cooking there, but also just to have one of our highest or most active council members on the show every week, I think is really, really important for the whole community. And, of course, he was at the Hashgraph Association before, which brings me on to a Hashgraph Association announcement this week, again with a team called WiseKey. And so in the past, we've seen the Hashgraph Association announce, partnerships with WiseKey for a platform called wise.art, which was for sort of high value NFT minting management marketplace with extra sort of security layers and verification, I believe. And so within that sort of similar theme, we saw them come out with another announcement this week with the Hashgraph Association, this time about creating a Hedera quantum proof, i.e. quantum computing proof, a quantum grade security wallet on Hedera so that we can ensure that user funds, token management, interacting with Web3 applications and so on will be safe and secure in that sort of post-quantum world. But what I find really, really exciting about WiseKey as a partner in the ecosystem is that they put out a while ago this photo of their founder with Elon Musk at Choose France Paris, which is a conference in Paris, with the caption, WiseKey CEO Chris Moreira with Elon Musk discussing how to launch more low-orbit WiseSat.space Pico satellites using SpaceX and Increment, the 13 Wise.sat Fossa satellites we already have in orbit. So this team is doing, hitting on all different cylinders, but obviously at the highest level to be having that discussion for one of their parts of their ecosystem with Elon Musk. The Hedera ecosystem loves to hear that Elon Musk is only a phone call away from the ecosystem, but it really looks like, he could be here via WiseKey and via the Hashgraph Association through that relationship. So great to see, him a bit closer to the ecosystem in that sense.
And we don't want to forget about, we got another hardware wallet to add. We have Tangem. So we do have several wallets that support us. We want to see some more support around HTS tokens, but this is, of course, the first step that we see. Another thing that I'm interested about is around Hedera joining a Web3 Harbor. Can you tell us about that?
Yeah, so the Web3 Harbor is a non-profit association based in Hong Kong, dedicated to engaging and representing Web3 builders, investors, users, and leaders to promote a pro-innovation, pro-collaboration, and truly inclusive environment for the development of the decentralized internet and virtual asset economy. So that's their boilerplate, their about us. It's exciting to see, Web3 Harbor with Hedera and the Hashgraph Association in Hong Kong, because we know that Hong Kong is still really pro-crypto, pro-Web3 innovation. And, as China does control a lot of Hong Kong, they have given them that sort of green light to continue pursuing that. So, that could open the doors for a lot of innovation through China, perhaps, or a lot of investment capital from that kind of region. And, Hong Kong has always been a leader in finance in the last sort of century or so. And so to see them, really taking on Web3 in that sense, and knowing that the Hashgraph Association and Hedera there alongside them in this region, with these thought leaders, with these connectors, with these BD teams, I think is really exciting to see. And hopefully that'll open up our sort of pool of influence within that region.
We can't go wrong continuing to see Hedera be involved with that APAC region. All right, so one thing that we haven't been talking a lot about, but we know they're still grinding forward, is the refi ecosystem for Hedera. And NoveqTech had an announcement this week. Can you give us some more information on that?
So NoveqTech signed their first ever long-term commercial contract with PowerSync to monitor real-world green hydrogen production in the United States. And it's estimated, I don't know if this will be one for one on the Hedera mainnet, but it says in this announcement that PowerSync will use Carbon Central, which is created by NoveqTech, to monitor and report on each kilogram of annual hydrogen production from the plants, representing over 100 million tokens to be created by the Carbon Central platform annually. So I don't know if that'll be one for one on the Hedera Guardian, the Hedera mainnet, but to know that they're being used at that scale for their first long-term contract is a massive bullish indicator for both them as a team, but also the Hedera Guardian as its next generation platform for the sustainability markets.
Absolutely. Now, we know that's another vertical that Hedera is leading in, and I really think that's another thing that could resonate with new users is our refi ecosystem. All right, so we had so much to talk about with our HTS economy that we had to kind of split it up. So I do want to go into the second part of explaining around the mouth. It's going to get into the tokenomics. It's going to get into their loudspeaker, which is the main component of this decentralized media platform. But I also want to highlight that they have an NFT sale that's going on as we speak right now. And I think it makes a lot of sense to participate. I think the valuation, the fully diluted valuation for it is $500,000. So it's pretty low considering the traction that they've already gained. Certainly not financial advice, but let's listen to the second part of the mouth. Now let's see how the mouth leverages HTS and Hedera for their revenue sharing and governance. The platform makes use of two different fungible tokens, mouth and its wipeable vote escrowed counterpart, VE Mouth. Mouth is a token with no keys and a max supply of 100 million. And here's where things start to get interesting. The Mouth token makes use of HTS custom fees. From the built-in 6% fee, 2% are utilized to maintain the project, something very common in NFT projects, for example, with royalties. But the use of the other 4% is what's novel. That 4% is used to keep the audience, creators, and influencers permanently engaged with the platform's channels. More on this later. Now let's take a look at VE Mouth, the platform's governance token. VE Mouth is wipeable and minted as needed with supply and wipe keys. The token is wiped on a regular basis and airdropped to Mouth holders following a weekly schedule. But here it gets even more interesting. To value long-term involvement with the platform, VE Mouth is distributed through an in-wallet staking component. The Mouth staking is non-custodial and has no need for dApps. You just hold Mouth in your wallet, and the longer you hold, the bigger your vote weight and your share of the revenue. Now in this last part, we'll take a quick look at some of the SocialFi components of the platform. Remember those 4% custom fees? Let's see how the platform makes use of those to get the desired actions and attitude from the audience and creators. The first one isn't novel by itself, a referral system. But the Mouth's referral system is built in a clever way that's already boosting the growth of the platform's main initial community, the Telegram group, and also incentivizes people to engage their friends for the long term, using the same rules applied for governance and revenue share weight. The prizes for participants of the referral system are distributed weekly along with the ones of the other SocialFi mechanisms we'll take a look at, and we think you'll like this one. It's called the Loudspeaker, and it's an uncensorable and trustless popularity contest designed to get a large number of people to post on X, formerly Twitter, under the directions of the platform. The whole contest is designed to keep everyone engaged and to maximize quality of curation. And everything can be easily managed through the Mouth's main interface, the Telegram bot, without any need to connect wallets or give up any type of access. And there's a bonus. Everything can also be done purely through TinyBar transactions with memos, one of those things only possible on Hedera. The Loudspeaker has the potential to become a product available to clients, but at launch, it'll be completely focused on growing and consolidating the platform, its fungible token, and the Mouth's own channels. For that, they're channeling 98% of those 4% custom fees into the Loudspeaker prizes, and this part can get really crazy. Depending on the volume, this fee allocation may lead to rather unbelievable prizes in HBAR for those posting and/or making use of their governance power. Let's take a look at those prizes in a Google Sheets prize simulator that's been built. We'll use today's volume for Grelf as an example, $561,000. At the current fee allocation and prize distribution, this is what the weekly prizes would look like. Crazy, right? Over 1.3 million HBAR in total weekly prizes, top prize being nearly 700,000 HBAR, 275,000 for second prize, 137,000 for third, and prizes for nominators and referrals as well. And everything weighted by token holdings and holder behavior. Can't wait to see how this plays out. And you'll be able to make a copy of this simulator and play around with it yourself, changing the daily volume to see what happens. More information on the Mouth is coming soon, so follow them on X and join the Telegram group to get involved and stay up to date. And Zeb, the last thing we're going to get into before we get into network analysis is going to be that full interview that I did with the founder of our premier meme coin, Grelf, Warlock. He had some really good insights, so let's check it out. So we're welcoming back Warlock. He is the creator of the premier meme coin on the Hedera network, Grelf, and they've been having a heck of a run lately. Warlock, can you tell us about this ride you've been on lately?
It has been absolutely insane. It has blown any expectations I ever had out of the water. I created Grelf as a joke, simply. A lot of people ask me, like, oh, why is the supply the small amount that it is? It's because I didn't think about it at all. I just thought it'd be funny to have a bunch of repeating sixes. That's it. It's been around for over a year at this point. It's had its highs and lows, mostly lows. It was very, very low the past 6 months. But I kept making memes, kept going at it. And, I expected it to have a recovery. I did not expect to. I mean, we're almost at 10 million market cap as of today. I mean, we hit $1 a few days ago. And I was like, okay, well, it's going to correct. I mean, it's a big benchmark. People are going to sell. And now it's almost 150. So I don't know what's happening.
But it is a grind for the people in the core community. Of course, you're the creator, so you shoulder a lot of that burden. But it is a grind for the people that try to keep up with everything as far as the memes and keeping it exciting, right?
Yes. I have a fantastic community. I don't know why they've stayed with me so long. I created Grelf as an anti-mascot. I created him specifically to be unappealing as possible. If someone was going to sell you a car and this was the guy selling it, you would not buy it. So to have a community that loves him, that, not even ironically at this point, just like thinks he's great. I mean, it helps that I can like do the character on Twitter Spaces and stuff. So people get a little taste there. I mean, the amount these people remember about random Grelf lore that I spread in the Twitter Spaces, I'm very grateful, but did not expect that. So yeah, they shoulder a lot of that burden, making new memes and constantly they're laser focused on what's going on with Grelf, much more so than I am.
Well, one of the things that I love about what you did, and I think you should just recap on it real quick, even though you've gone over it several times in the past, but the reason why you created this meme coin.
So it's very simple, and it's something that I've ingrained into kind of my philosophy, even as I do so with my career, is, a lot of people who invest in an asset, in a network, like Hedera, they love it. They know everything about it. They'll watch all the YouTube tutorials about how the technology works and how fast and efficient it is, but they won't use it. And if you love the network, if you think the network's great, you should use it. An easy way is to buy a token. It's extremely easy now to make a token on the Hedera network. It takes a few seconds. It's in the hashpack menu. It's very simple. So with Grelf, he's silly. He catches your attention. He's an ugly bald guy that's some kind of fantasy creature. But buying the token doesn't take much time. And someone who's new to our network who comes over to buy the token, to speculate, whatever, to have fun, they immediately see the benefits of the Hedera network. It is very obvious within seconds, because that's, more than the time the transactions take, how efficient our network is, how cheap it is, how above, well, I mean, if you compare it to Ethereum, it's not even fair at this point. Goodness. But it's just a great use case of showing people, okay, I'm new to this network. What's good about it? Oh, that's what's good about it. Okay. And what we find is a lot of them stay because it doesn't take much, investment or money to stay in this network. Part of the reason I even got started with this network was doing NFTs. And it was because the costs for making NFTs were tiny, like nearly insignificant. And they've actually gotten cheaper as time has gone on, which is crazy, because I think some initial people were getting a little extra fee. So yeah, it's a great way of bringing new people to the network, getting new eyes on the network, and showing them in a very visceral way why our network is the best.
Well, congratulations on all the success and jumping on here on super short notice.
Anytime, always. I'll always talk about my beautiful bald boy.
And Zep, with that, let's go ahead and get into some network analysis. So Hedera is still processing about 1,300 transactions per second, with a peak of about 4,100 transactions per second over the past week. Captured within that, we had about 970,000 smart contract calls, generating nearly $50,000 in revenue for that service alone. All this while maintaining a 3.4 second time to consensus finality, and account growth is still strong with 66,000 accounts created just this past week. And moving down to our fungible tokens, Wrapped HBAR used in our DeFi ecosystem once again took the top spot, followed by the meme coin Unlucky. And actually, the next four are the same as last week's lineup as well. In the third spot, we have Saucer Swap's Sauce, followed by Karate, USDC, and Dovu. Next up, we have Hsuite, which, as you mentioned earlier, made a new all-time high this week, followed by Energy Trade Token, Candy, and Hashpack's Pack Token. Its name isn't showing up correctly for some reason, but that last one is the Pack Token. Looking at our NFTs, the Lithos Rant CPU NFT lost a couple of the top 10 positions, but still took that top spot, followed by Saucer Swap's LP token, Earthlings Bag Holder NFT, and the Road Code Full Access card. We also have Zero, the Not a Slime World token, and the Doctor Who Worlds Apart NFT making the list. And I'm also really happy to see the Hsuite Liquidity Provider token making the list this week. So Zeb, do you have any thoughts on NFTs this week?
Yeah, so we saw Hashpack launch their concierge collectibles, or rather they launched the information, on the concierge collectibles, which will be how you can partake in the pack token allocation, which is their own native token that will be launching on the Hedera token service, which is of course one of the most anticipated tokens to be launching definitely this bull run. That isn't the only way you can get into pack. There's other ways, like early supporters, the people who've owned some of their early NFTs, they'll be airdropped. And there's some other methods as well, I believe, which are on their account if you just take a scroll through there and look at their daily tweets. But that to me is one of the biggest announcements this week in the NFT side of things. I'm very, very excited to sort of closely watch how pack develops.
Yeah, Hashpack is certainly one of our A-list teams. And with that, we'll go ahead and get into some DeFi. Taking a look at DeFi Llama, the total value locked in the Hedera DeFi ecosystem is at $148 million, with $145 million of that coming from Saucer Swap. But that doesn't include Hsuite, which now has over $8 million in TVL. Taking a look at the yields on some of Saucer Swap's popular trading pairs, HBAR X version 1 is at 6%, HBAR Sauce V1 is at 21%, V2 at 101%, HBAR USDC V1 is at 47%, and V2 is at a blistering 276%. And finally, HBAR Karate is sitting at 58%. Taking a look at the HBAR and crypto markets, Bitcoin made another run at the all-time high this morning, and at the time of recording is sitting just under that level at $68,400. I think we'll have to decisively break above $70,000 before that resistance can be considered broken. Every time it looks like Bitcoin might break out, don't be surprised to see traders pull capital from the mid-caps like HBAR to try to catch the clear skies price discovery tear that Bitcoin might go on. Large caps like ETH and Solana will hold up well during that time, but once things settle down, if Bitcoin holds that new all-time high, look for capital to flow back into those mid-caps. As I'm looking at the charts, HBAR is sitting at 12.9 cents, up 12.5% on the week, but down 4% on the day. We may be setting up support between 12.4 and 12.5 cents, and we have that strong support at 10 cents. I'd look to 14 cents and then 16 cents for resistance if we resume that uptrend. All right, Zep, that's pretty much all we have. Is there anything else you'd like to pass on?
What is just generally exciting all around is that we seem to be in this positive trajectory of the market, insinuating as that we're in a bull market. And this time round, we don't just have the HBAR and the promise of enterprise, but we also have this much wider token economy that goes across GameFi, DeFi, SocialFi, and far, far beyond, which can pull in different users from different networks, onboard new community members all the time, and give us a vibrant token economy that sits around the HBAR and the Hedera network itself. So as the market gets more excited, hopefully more of this capital will be coming into our own token economy, as we're already seeing, and that will continue to enable us to crawl up that leaderboard and really outperform like we deserve to. So I think just all around exciting to see that a lot of our token projects already are outperforming, as we mentioned, Hsuite, Dovu, and so on and so forth. And hopefully that'll continue to be mirrored in the wider ecosystem, both in terms of growth, but also our own ranking on, the CMC leaderboard. So exciting to be in this position and exciting to be monitoring over the coming months.
Yeah, no question about that. Next week, I want to dig a lot into the HTS economy. So there's going to be some topics around that. I want to get some more information around the new HIP for airdrops. We're going to have Rob back, of course, for Shark Bites. So drop your questions down there for Rob on the HBAR economy and the Hedera ecosystem. That's all we have. We'll see you next week.